Hello Mumbai, and congratulations India for being 1 year old today on your GST. Thank you Vinod, and thank you the GST Research Foundation for inviting me here to speak today. Unfortunately, as much as I would love to have been with you there in person, I'm unable to do so. So I hope that this video is well received and offers a slightly different insight into the world of GST and indirect tax in general. The GST Research Foundation slogan is Growing Society by Knowledge Transformation. And I think this is often something that is overlooked or lacking in the world of tax, particularly in indirect tax such as VAT or GST. However, events like this help to bridge these gaps by bringing experts and people with experience to share their stories, their opinions and their knowledge. We can grow our society to transform into a better version of themselves. Unlike many of the other presenters here and the members of most indirect tax panels or associations who have a background in either tax law or accountancy, my background is that of information technology. I spent the first part of my working life implementing global ERP solutions using the Oracle ERP suite, when my speciality was the financials modules. I gravitated towards the indirect tax automation when Oracle released its own internal tax engine. And over the years, I've become the leading expert in this application, being the only person ever to be awarded the Oracle ACE title for the work that I have done on the e-business tax module. And I'm also the current chair of the Oracle Tax Management Special Interest Group, where we, like the GFR, try and share the knowledge on indirect tax automation. So, I'm not a tax lawyer, nor am I a certified accountant, but I do know tax automation better than most, and I do understand how the data flows through the veins of an ERP system and how that data can and should be used for tax determination. It's because of this that I bring a slightly different approach to the tax world, because I look at things differently. I look at things from the bottom up, from where invoices are created, how they are created, how the tax is applied, how users process the data, and how that data is ultimately reported. My team are the translators, if you will. We make sure that the tax law, as given to us by the tax advisors, is translated into tax logic, and the rules allow us for tax automation. If we look at the way GST is implemented, the way the laws are created, how much time is really given to the actual processing of data or how it can be processed? When a tax law is created or a new reporting requirement is introduced, does anyone really question how a company can automate that, if it is possible, and what the risk is when ultimately the work now has to be done manually? The introduction of GST in India on the 1st of July last year was a huge step forward in trying to achieve this. But what new challenges were introduced? Any new introduction of technology usually has side effects, and with Indian GST, there is no exception. The main problem with GST are the tax returns, and those returns, or the problem with those returns, is getting the data, the correct data, into them at the right time, and not just the data, but accurate data. So my presentation is titled Tax Technology from the Bottom Up. Because, just like any other business, understanding how things work on the ground will allow for a better performance and better efficiency at the top. The ultimate goal for GST, VAT or sales and use tax is the total compliance and the elimination of any fraud. But this will never be achieved until all of the components are fully understood. So without further ado, tax technology from the bottom up. Welcome to this presentation on tax compliance from the bottom up. My background, as you know, is that of information technology, the design and configuration of global ERP solutions. Later on, I focused solely on tax automation. For those of you that don't know, ERP means Enterprise Resource Planning, and it's basically your accounting or finance systems. This presentation is geared specifically on tax automation and how important it is for tax compliance. I just have 3 topics of my agenda: where things go wrong, how compliance drives pretty much everything, and what can and should be done to be ready for what is coming. The world of indirect tax is changing, as we're seeing more and more tax authorities globally adopting technology, with many demanding insatiable amounts of data. Often they follow the OECD's guidelines for SAFT, which is your standard audit file for tax. And as you can see here, we also have areas where governments are introducing what we call live reporting, or where they're bringing in invoices into the to be validated by the authorities as part of the tax returns. This is ultimately something that India is very, very aware of. India is a classic example of this, with a new GST regime that was delayed for years, but ultimately when it came, it was slammed in. Even though many thought and hoped, I would imagine, that it would be delayed again, it wasn't. Was India ready for this new tax regime? No. But would it ever be ready? And in fact, is any country ready when a new tax regime is introduced? Even in countries like Saudi Arabia and the United Arab Emirates, where VAT was introduced for the first time, I would estimate that over 95% of companies did not start their VAT projects until 1 to 2 months before they needed to go live. And they could have started literally a year before. I personally applaud India for making the decision to go even when things were not finalised, and then sticking to it. The end game makes a lot of sense, but how do we get there? My presentation today is about the importance of understanding what a business is capable of with the technology and human resources it has in meeting its obligations to the tax authorities, but also to give food for thought to those tax authorities in how they set these obligations. Because ultimately, these obligations revolve around the capabilities of the accounting software that companies use, the ERP systems. Because without these applications doing the tax for us, we have to rely on the manual intervention, which is the biggest risk to any tax compliance. One of Innovate Tax's principal design strategies is to minimize the tax responsibility to any user. Why? Because users make mistakes. They will always make mistakes. They will incorrectly set up a supplier address. They will forget to check a customer tax registration number, choose the wrong purchasing category, forget to assign an exempt status to a new item, or simply choose the wrong tax code when entering an invoice. If you remove the user from the equation and the source data is correct, then tax can be automated 100%. With this automation, we can make sure the tax returns are also correct. So let's first look at why so many tax solutions implemented and used simply do not work as they should. It's one thing to be able to create a tax rate and a tax rule. It's something completely different to create a tax solution. And I think this statement here of ignorance is bliss is so true. And this statement means that if someone is unaware of an unpleasant fact or situation, they cannot be troubled by it. And I think this is so true when it comes to tax, whether it's VAT or GST, any types of indirect tax. And I think this impacts most tax solutions in three major ways. Most of the people, the users that enter transactions, have no idea of the impact of tax. To them, they just want to get things done, to get through the pile of work on their desk. And if an invoice comes in and there is no tax on it, just use exempt and get it overridden and get it through. Because that means the invoice gets validated and it gets paid and they get to go home because they've done their job. They have no real understanding or idea the impacts of VAT or GST, and they have no idea that using an exempt tax code, for example, when a reverse charge should have been used, could ultimately make the tax return non-compliant and lead to fines. In our studies, we have found that most mistakes, when found, are either done so after the month-end close. And that's potentially up to 50 days after that mistake was originally made. And these mistakes are then manually corrected with an adjustment rather than going back to the user and offering any education or trying to make those adjustments at source. Now, if I asked you to buy a new van, which one would you choose? If you had no idea about vans, then the only differentiating factor that we can see here is the price, with one being 30,000 and the other 50,000. And in many cases, this is the primary driver for deciding on what to buy, particularly when it comes to a tax solution, because we only know what we know. By that I mean that when we are embarking on looking for a solution to a problem, we always will look backwards first. We always look at what we already know, and often we don't know what we want because we cannot ask for what we do not know. So often, instead of thinking differently, we are sold exactly what we had before, but without all of the additional add-ons that, like this van, will make our journey easier, safer and more efficient. If you did not know what a driver alert system was, for example, and the safety benefits it would bring, you wouldn't ask for it. And that's very, very true for the types of tax technology that is available that is simply unknown to most of the tax users out there. That's why knowledge is so important. To understand what is possible not only allows you to choose the right solution, but it also to make sure that the solution that you do choose is implemented correctly. So you can actually challenge those who are configuring it. Finally, the biggest and most damaging cause for non-compliance to any VAT or GST solution is the abilities of those setting the solution up. Whether being done in-house or by external resources, the lack of knowledge or the ability to implement as quick as possible to increase profit is a huge risk to our solutions. The majority of companies out there will think that they are compliant because they can submit a GST VAT return, but this does not necessarily mean they are compliant. What they end up with is the red van. It is a VW, but it's not quite as they had pictured in their head of what they were going to get. But this ultimately meets the specifications of what they were sold. So let me use a case study to try and explain this in a little bit more detail. We recently reviewed a VAT solution put into a well-known and large company in the Middle East as part of the new GCC VAT requirements. So similar to India GST that we had a year ago, the Gulf States, or the Gulf Cooperation Council, which is the GCC, also implemented a new VAT regime. Unlike India, with the GCC, there was no existing VAT regime in place. And this particular VAT solution that was put in place was done by a very, very well-known and one of the largest integrators in that region. Now, for this particular country, both ourselves, Innovate Tax, and one of the leading tax engine providers on the market recommend the use of around 200 plus tax codes due to the reporting requirements. For this particular entity that we were reviewing, due to their business requirements and the location they operated in, they could have actually got away with around about 25 to 30 tax codes. But the solution that they were given had just 3 active tax codes. The integration partner, to compensate this, instead of using the standard VAT reports that were available and using additional tax codes to capture that information to meet those reporting requirements, they instead combined other values that could have been used for the tax determination to build custom reports, all at the expense of the client. All of these custom reports, this solution would have relied or will rely on heavy maintenance as well in the future. To my horror, I also found out that when they interface data from third-party systems into their core ERP solution, instead of capturing the VAT amount in the interface itself, they only captured the percentage that was being used to capture the tax. And instead of reporting the actual tax that was captured in that third-party system, they were using the report to recalculate the tax using the percentage that was brought across and the taxable amount. So they were recalculating the tax in the report. Considering that this particular entity were consolidating huge amounts of small transactions when they were interfacing it, a penny difference could have led to a 10,000 difference on 1 million transactions. So this type of solution is clearly not compliant because the project, even though deemed a success because the VAT returns were being submitted, obviously did not have the due diligence and the processes in place to make sure that the data going into those tax returns was correct. It was clear to me that the design of the solution was taken from other systems that this integration partner had worked on other projects, and there must be many other companies that would have fallen foul of this particular implementation methodology and solution. And the sad thing is that many of these companies will be blissfully unaware, ignorant to the fact that whilst they may be able to run a report and it has data in it, they're probably going to have problems reconciling that data back. And if they ever were to be audited by a tax authority, those issues are likely to be picked up and found very, very quickly. Compliance is king. But what do I mean by that? If we don't need to be compliant, we would not need to bother about doing anything for GST. Why would we? But in order to be compliant, we need to be able to report the data, not just in your GSTR or GST or VAT returns that we see globally, but other reports like the European Sales Listing Report, Intrastat reports, SAFT, live invoice reporting, etc. They're all driven from indirect tax because, let's face it, where else can we get more frequent and accurate data on the economy? Unfortunately, for many tax authorities, this is where they stop. They design the reporting requirements and the format that they want the data, but then do nothing to enforce the providers of ERP systems to ensure that the data in these reports is correct. Most companies consider themselves to be compliant just because they can produce a GST return. And in fact, many others will know that they cannot accurately report the GST, but do so with a hope and a prayer. But this is going to change. Not because these companies are looking to do things correctly, but because the tax authorities are extracting more and more data and will ultimately end up doing the GST and VAT returns for you. If the tax authorities are doing the actual returns, then the quality of the data being submitted has to be perfect. Because if it is not, it will get picked up. Tax authorities are now employing data analysts above and beyond any other type of job role because they see the future in big data and how they can process it. This means that there will be no place to hide anymore. A tax manager would check for what they think they need to check for and will sample, as would any manual tax audit, transactions to investigate. Big data can check each and every transaction and run 1,000 checks for each of those transactions. That is not possible without big data. Ultimately, the tax authorities are auditing every transaction on every return for everyone, and faster than one person could check just one company. A payables user choosing exempt instead of a reverse charge can now land the company in trouble, whereas before no one would have even noticed. I don't think I would be wrong to say that the majority of GST returns are first prepared after the month end has been closed. The problem with this is that it's historical data that has already been processed and filed. It could be 50 days from a transaction being entered to when it is first being looked at in a tax return by a tax manager. That's potentially hundreds of issues that have been entered that now have to be corrected. That's way too late. Tax has to move away from being reactive to being proactive. In our experience, little is done to identify the issues at source and get them fixed. Most tax adjustments are made manually. So here we have our ERP team. Those that enter purchase orders, receivable invoices, AP invoices, orders, etc. And then over here, we have our tax department. They're usually separated from the rest of the business. They don't normally get involved on a day-to-day basis, usually doing their work at the end of the month. And unfortunately, what we see is that there's quite a bit of a divide between the two departments. The tax or the ERP guys will enter transactions in the system, month end will take place, and then the tax department will run various reports to identify any issues and make manual adjustments. Whether it's VAT, GST, sales and use tax, that is your typical tax monthly process. We believe this is wrong. What we need to do is take away that wall, take away the divide that separates the tax department from the rest of the business, allow them to look at transactions in real time and make adjustments at source. Innovate Tax have designed their solution to allow the tax department to identify issues on a daily basis, and have designed what is probably the first true real-time tax analytical tool. The tax department can then get a transaction corrected for GST at the source, providing a full audit trail and getting the system to do all the adjustments. With one of our clients, we saw the number of issues drop from 450 a month to just 15 a month over a 3-month period. Spain have introduced the SII report that requires the uploading of invoices every 4 days for VAT purposes. Other countries are soon to follow suit. This frequency makes it almost impossible to leave data to be checked at the end of the month, because if errors are made and then the corrections are made as adjustments at the end of the month, this will be a spike in any data analysts and sure to flag that company for further checks. The foundation of all tax compliance, what everything is based on, is the tax solution, a solution that should always be built based on the reporting requirements. This can be simple as manually choosing a tax code that is applied to all sales and purchases, or can be full automation of GST determination, something that Innovate Tax excel and are market leaders of. And whilst full automation is always preferable, it may not always be achievable. Oracle is one of the few ERP tools on the market with a world-beating tax engine, but most of the ERP tools out there only have basic tax determination capabilities. In these cases, there are third-party tax engines that are available that can pretty much connect to any accounting application to help determine the tax correctly. Cost, of course, is another huge factor, as it takes a lot of time to set up an automated tax solution properly, something that a lot of companies won't be able to do. And of course, not all businesses are international conglomerates and often just do one thing: a restaurant, a small consultancy, a dentist, a local convenience shop, etc. These businesses often have very simple GST requirements, many simply applying standard rated GST on all sales. These companies also do not need to have complex costly tax determination, but they are all bound by the same tax laws and for most the same reporting requirements. One should not look to tar all with the same brush, and I think thresholds of revenue should be used to make sure that certain companies that are above a threshold must have tax automation to a certain standard, rather than allowing for users to be able to choose those tax codes manually. Putting pressure on the ERP providers too to ensure that they have the capabilities to meet all of the GST requirements would also help to standardize the correct approach and to push for better compliance, even if that means that an ERP solution integrator has to partner with a third-party tax engine provider. So what should we be doing now, or what can you do now to prepare for the future? Unfortunately, in our experience, most tax solutions are set up by inexperienced consultants with a lack of understanding of tax and the pressures to do things as quickly as possible to maximize profit margins. Cronyism and nepotism tend to feature heavily when it comes to projects around IT and tax, particularly from what we have witnessed in India and United Arab Emirates. Tax is not something that you can have a go at. It's one of the most complex parts of any ERP system and often has the biggest financial penalties if it is not done correctly. With the help of organisations like the GRF, standardisations need to be introduced to ensure correct and best practice is followed. The CFO needs to be aware of how important correct tax determination is to a business. The return on investment for most of the Innovate tax projects is under 3 years. A good tax solution will save your company money. As a company, you need to focus on getting the data as correct as possible and use regular checks at least once a week, if you can't do it on a daily basis, to monitor the transactions for tax issues rather than leaving it until the end of the month. Use more tax codes, but with the solution that does not allow users to choose those tax codes. With tax automation, we can derive different tax codes to allow for better reporting and easier reconciliation without involving the users at all. Expect that at some point in the future, you will not be doing the tax returns, but the authorities will be doing it for you, and consider what will be needed to be reported. You may argue that you don't know what that is, but look at what is happening around you and see where the trend is taking you globally. Look at SAFT or live invoicing and ask yourself if your system can meet those requirements. And if it cannot, then start preparing for it. Innovate Tax has almost 150 countries on its repository, and every single one of those will be able to meet the requirements that are coming in. Because VAT and GST are pretty much the same everywhere, sharing the same DNA. Look to make any corrections at source. This means correcting the actual invoice where the mistake has taken place. Most ERP systems will handle all of the accounting and GST changes that take place, and best of all, you now have a full audit trail that is going to be so important when it comes to showing the authorities how your data is processed. Tax authorities need to do their part also. They should look to simplify wherever it is possible, and research has shown that those countries with less complex indirect tax solutions have much smaller financial gaps. And what about the tax team itself? We're starting to hear more and more about the term taxologist, which is a person who has a good understanding of both tax and tax technology. This person is there to ensure that the business they work for has the optimal tax determination to be compliant. But I believe a new role will also emerge, known as a tax data analyst. This person is there to check on a daily basis that the quality of the transactions and the source data is correct for tax determination, and to respond immediately if there are any issues. This will ultimately lead to better compliance and increase the speed of any tax returns. What we have found is that there's often a lot of disjointness when it comes to the cost of a tax team, because there is a hidden cost of all of the extra resources that are needed to process the tax correctly, or in the reconciliation part, that may not necessarily be seen as the tax cost solution. These hidden costs can be eliminated with a good tax automation solution. But most of all, companies need to listen now and become informed so they are ready for the future.